An inflation surge is underway. The question now is going to be, are rate hikes possibly in the cards? Today we'll break it down for you. Let's get started. I do want to thank our sponsor. That is Tangem, where you guys can secure your digital assets on a self-custody model. And the way it works is like a credit card. It works with your phones. This is a hardware wallet. Very easy to set up. Use our link down below. It's going to give you a little bit of a discount. You guys can put anything on it that's a digital asset. You're going to love it. Check it out. If you're brand new to crypto, this should be on your checklist to get into, and that is self-custody. Take a look at that because Tangem is a great one. Let's get into it today. I want to lead off with Heather Long here, hitting on how inflation is really eating away at one of the core strengths of America, and that is the idea against wage gains. Now, CPI inflation and inflation in the past year are 3.8, wage gains holding only 3.6. This is another big hit on what the American economy is dealing with right now, especially with these new prints coming out. You look at that along with this, which is just a line list and quite possibly underreported of how much increase that we have seen in all key areas, including energy, gasoline, airfare, energy inflation, fruits and vegetables, hospital services, motor vehicle repair, all of these up considerably, guys. So how much is this affecting you? Because I think this is the key. Are you feeling this at the pump? Are you feeling this in everyday life? Let me know in some comments down below. What's the most expensive or the biggest lifts that you've seen in your own budgets? Further into this, Pompliano says it should go down without saying that midterm elections will essentially come down to whether the cost of living is going up or down for an average American. And when you look at the current midterm layout, you've got the Republicans holding right now back up a little bit. This may change. I anticipate this could shift back to a blue wave if we continue to see these numbers climb over the summer. So be on the lookout for this one for sure. Kevin Warsh, of course, gets confirmed. It is now official. He is the new Federal Reserve chair. And of course, this is all happening right now as we are seeing inflation starting to impact. He is going into a buzzsaw. And when you look at Fed rates right now, the potential for a hike actually hiked up to 31%. This is a Fed rate hike potential. The question is whether or not Warsh will go head to head with Trump if it gets into a scenario of whether it's a pause or a hike. Let me know what you guys think. Do you think he'll comply with Trump's wishes to pause and or lower rates, or do you think he is going to come at Trump with a rate hike, which would be a huge hit going into the markets? Americans now also spending down their savings. This is a problem because it's getting into some of the core areas that most Americans deal with. You've got negative cash flows now that are hitting places like Kraft Heinz, which is all in the food sector. You also have comments from the McDonald's CEO, Christopher Kempczynski, who also talked about rising prices, all disproportionately hitting low-income consumers, which is their biggest category in terms of sales. This gets into major Wall Street impact across a lot of stocks and also, I think, a lot of sectors that people don't realize that could roll over into other sectors in the market. One of the things you got to look at is the delinquent credit card balances, which are about to surpass financial crisis record. This gets very, very crazy, guys, because we are dealing with something that is ramping up very quickly. Could this be the beginning of it? That's the real question in the market, and it makes people pause a little bit in the sense of how to deal with this, because the factor really flows into this right here, and that is, where's the market at today? Burry is saying that stock markets is literally minutes away from a bloody crash. Could we see that? There's more than 250 billion wiped from the U.S. stock market at the open. This was just this morning. Anticipation is that we're going to continue to see this start to put pressure on, especially as people start to vet out what these inflation numbers mean to the markets. Other things that, of course, you have to look at, even Jamie Dimon has warned there's way too much exuberance in the market. Is this the scenario that we've been talking about for a while and have had a few analysts point to, and that is there a potential pullback? And then one other thing you've got is whether or not the rest of the market is nervous. Now, I've got a clip here that will break this down. Should you be? Take a look.
Guys, this has been a huge run to the upside since March. And, you know, everybody talks about the various superlatives that we've seen. And I have to wonder, against this backdrop of a very complex geopolitical environment, one where we're also seeing high oil prices. What do you think the sustainability is of the equity market rally at this point in time, Steve?
Look, does it make me nervous? No. Does it make me understand that at some point we're going to have a massive intraday unwind in momentum? Absolutely. There's going to be a day. I said this last week. There will be a day where the momentum factor is down 4 to 5% in a very tight period of time. You're talking about the momentum factor being up 30% so far in the current quarter. There's a fundamental acknowledgement in place right now that this new industry, and really we are creating a new industry if you think about it. Technologically, we are rapidly building out an entire new industry. And the fascinating part of it is the user engagement of it is at the very initial stages. So today we have NVIDIA, $5.4 trillion market cap for a company that hasn't even reported yet.
And to his point, that's the real question is, do we see this adjustment in the market? Maybe this is the beginning of it. All of this leading into other things that are happening worldwide. You have the Korean stock market coming in, and they proposed this whole idea of around an AI dividend, a national dividend. And the issue is it hit the markets, and there was a reason why. If you look at the explanation, within 90 minutes, the Kospi, this is the Korean stock market, shed more than $300 billion in the market value. The policy chief later had to come on and clarify that the proposal would draw from excess tax revenue rather than new windfalls levied on corporate profits. So there was a little bit of miscommunication, but the point that this makes is that all the markets are skittish. They understand where we are right now. Are we at a point where we've been seeing these massive upside swings that eventually we get this correlation to a downside push, and are we there now? I think that is the state that everybody is asking. Mark Cudmore kind of explained this a little bit more of what happened in Korea, because this could happen here. Take a look.
We saw 7.2% move in 97 minutes in the Kospi. That's $300 billion worth on essentially a misunderstood kind of statement. It was the idea they were going to tax excess profits. What the minister actually meant was that the extra tax revenues they're already making from AI should maybe be redistributed. So that shows the kind of market we're in. But it's really, really important to emphasize we're about to go into a load of risk events. And I think short term there's going to be more volatility, more damage. But all these dips will be bought, and we will see much higher levels until there's genuinely an AI negative catalyst. And I just don't see that on the horizon. So I think in the short term it reflects, hey, get prepared for even more volatility. Kospi could drop 20% from this morning's high and still be higher than any level seen in history up until 3 weeks ago. So that's pretty scary. That shows the pace of these moves. So expect even more volatility, expect even more big swings, but it's not the end of the market. It's not the end of this incredible bubblish bull market that's going to go absolutely crazy before it ends in tears.
All right, so what do you guys think? Do you think we are in this area where we could see these massive swings down and then possibly see just an absolute crazy climb upward, even though we're starting to see indicators of rising inflation and definitely some pressure on American consumers? Obviously what we're seeing there in Korea, a little different game in terms of investor strategies and the sentiment that plays into all of this. The key here, of course, is still coming up with what's happening in DC this week, which is clarity. Things are going to get kind of crazy there. Make sure to check out some of our videos on that because we're breaking some interesting news on clarity. We'll keep coverage of what's happening right now with these market increases, so stay tuned. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.